Hello, this is Japan Economic Review Channel. Today we present the Japan Labor Economics Briefing based on the final confirmed report for March 2026. We will explore how Japan is transitioning into a high-wage, inflation-resilient economy through structural changes in the labor market. The March 2026 data reveals a healthier market. Nominal wages grew by 3.1%, effectively outpacing inflation. Meanwhile, total hours worked remained stable, with a 0.5% increase, and regular employment expanded by 1.1%, maintaining steady job creation. A key highlight is the nominal wage surge of 3.1%, bringing average earnings to 318,563 yen. With CPI inflation at 1.6%, real wages achieved a positive growth of 1.4%. This marks a critical turning point where wage hikes are defeating inflationary pressures. Historically, Japan struggled with negative real wages, averaging between negative 1.0% and negative 2.5%. However, the positive inflection of 1.4% in March confirms that structural wage hikes are taking root, stabilizing the real purchasing power of workers. Breaking down the paycheck, base pay increased by 3.4% year-on-year, acting as the strongest driver of wage growth. Conversely, bonuses contracted by 0.7%. This shows a permanent shift towards higher quality wage inflation through fixed base pay. A divide exists in the workforce. General workers saw a 3.6% increase in earnings and a 3.9% rise in base pay. In contrast, part-time workers, who now make up 31.82% of the workforce, saw only a 2.0% increase in total earnings. This leads to the part-time paradox. Despite a massive 4.3% surge in their hourly rate to 1,437 yen, total hours worked dropped by 1.9%. This divergence highlights working hour adjustments, likely to manage costs or stay under tax-exempt thresholds. Overall labor volume remained stable at 133.4 monthly hours. Scheduled hours rose by 0.6%, while overtime contracted by 1.0%. This proves the nominal wage bump is driven entirely by structural base pay increases, not by excessive overtime. Sector performance shows a clear K-shaped trend. Capital is flowing into information, finance, and construction, which see high wage growth. Meanwhile, accommodations and eating services struggle with a 7.2% decline in average monthly wages. Highlighting our growth engines, construction saw a massive 8.6% wage premium due to labor shortages and overtime regulations. The finance sector thrived with a 6.2% wage growth, driven by profitability from Japan's exit from negative interest rates. The labor market remains highly liquid. Regular employment continues to expand by 1.1% year-on-year. With an accession rate of 1.75% and a separation rate of 2.32%, businesses are actively absorbing talent to meet demand, despite demographic headwinds. A corporate size premium is evident. Larger firms with over 30 employees drove wage hikes more aggressively at 3.6%, compared to 3.1% overall. This highlights their superior pricing power and ability to outbid smaller competitors for scarce talent. Globally, Japan is no longer an outlier. With real wage growth at plus 1.6% using comprehensive CPI, Japan is currently outpacing the United States at plus 0.1% and catching up with Germany's plus 1.8%. Japan's wage momentum is now competitive internationally. Japan has achieved a macroeconomic sweet spot. Structural base pay is rising by 3.4%. Purchasing power is growing by 1.4%. And the workforce is expanding by 1.1%. This rare balance is driven by permanent compensation structures, not unsustainable overtime. Strategically, sustained positive real wages provide a solid floor for domestic consumption. While the wage gap between SMEs and large firms suggests ongoing consolidation, structurally higher base pay justifies further monetary policy normalization by the BOJ. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.